back to the Real Estate Huddle. We are episode 121 today, and we're going to talk about a really cool thing that you can do to take advantage of some very interesting tax situations. So if you are an investor, a business owner, or maybe you just made a bunch of money that is now taxable with taxable gains, this is something that can really help you, and it's called an opportunity zone. And so we want to start this off by just saying we are not, nobody here is a CPA or an accountant, correct? Okay.
Don't sue me.
All right. So we're just educating people on stuff they can find on Google, but we absolutely recommend you talk to a CPA and verify what opportunity zones are and what they can do for you. However, if you could sell a stock, a business, an investment property, and then legally even delay or even totally eliminate your tax burden, that's something that would be pretty awesome by reinvesting here in Denver. And so that's what we're going to talk about. And you know, most investors focus on returns, just returns, but sophisticated investors, they focus on after-tax returns. And that's a huge, component in this. These are big, and people that take advantage of these opportunity zones end up making a lot of tax-free money or tax-deferred money over time. And so this is one of the most least understood and most powerful tax tools that are available right now. And so today we're going to break down what opportunity zones actually are and how tax benefits actually work and where they exist specifically here in town in Denver. And that way you can decide whether this strategy fits what your goals are or not. And so the first point, we're just going to talk a little bit about what these are. What are opportunity taxes and kind of where they came from?
Okay, so what are opportunity zones? So opportunity zones they're created under the 2017 Tax Cuts and Jobs Act. So they're designed to encourage long-term investment in economically underdeveloped areas. And typically investors reinvest capital gains into these areas through a qualified opportunity fund or a QOF. So basically what that means is the government's basically saying if you're willing to invest in certain neighborhoods for the long haul, we'll reward you with this big tax cut or this big tax advantage or whatever you want to call it. Mm-hmm. And those are typically for like business owners who sold a company, or like investors who sold like stocks, crypto, real estate, high income earners that are sitting on some major capital gains.
So people out there that just made it huge on Bitcoin and have a lot of money in crypto right now.
Yep.
They could benefit from this sort of thing.
Yeah, it's from the sale of like any asset. And what's really cool about it is you can either like defer those capital gains. So if you invest in the zone until you sell that business, you are deferring paying those taxes. But if you hold it for 10 years, not only are those gains tax-free, but any gains on that business are tax-free as well. So if you invest, $100,000 into a business in an opportunity zone, and when you sell in 10 years, you make $200,000 on that, all $300,000 is tax-free.
So you kind of have to have the time and resources to be able to wait it out. That's what it's sounding like.
Yeah. Definitely. Yeah, it's a long-term play. Definitely not for like fix and flippers. It's more your long-term savvy, sophisticated investor, right? That's going to be strategic, and it's pretty cool. Oh yeah, go ahead.
Yeah, I will say you do defer the taxes for the whole time that you're controlling that. Mm-hmm. So you can defer it for 9 years. But 10 years is that sweet spot where you hit it where it's just all tax-free and you can sell it, you can hold on to it, do whatever you want.
Yeah.
I hate taxes. So I just want to make that clear.
Layman's terms of what this looks like, right? So let's say that like someone owned a rental property. We're just talking like residential real estate wise, like what people would understand the most, I think. Someone owned a rental property. Instead of cashing out on that rental property, they put that property into a qualified opportunity fund, like they're talking about, right? Where they don't see that money, right? They pass it through a fund that then gets passed into, when they sell, it goes straight into an asset that they find. Like say they find a property on the map that's in the opportunity zone in Denver, right? Which we'll talk about what areas those are in a second here. But that property, if they bought it, and let's say they bought like a duplex or they bought a home and then they created an EDU on top of it, right? Or something like that, you can reinvest in that space put the money from your sale into that, and then hold that for 10 years or more for that to be a tax-free like investment. All the growth would be tax-free as far as, what you can find on Google right now. So definitely verify with your CPA. Again, we'll say that a couple times through the episode, but that's what these are all about. So we want to just educate people that these are out there and that there's some opportunities where you can save a lot of money.
Mm-hmm. And there's about 20 of these zones. I think it's 126 total across the state, but in Denver Metro alone, there's about 20 of them. And they're not super defined, so they have some qualifications for what it takes to meet one of these zones. But there are definitely areas of these zones that are really great places to invest in that are actually pretty nice. I'd say, if you're working with someone like us, we can definitely identify, hey, if you're in this portion of one of these zones, it's going to be a really good opportunity for you. So they have to have at least 20% of the residents below the poverty line. But the zones are pretty big. So there's some of those zones where a small portion of it is what's qualifying the zone. But then the rest of the zone is actually a pretty nice area, is already developed. And because of other investor money coming into these opportunity zones, we can expect more development in them.
Yeah, definitely. So that's pretty awesome. And now we'll talk about like where these are in town, right? Where are these types of places at? And there are maps you can find on like Google Images that will show you the Denver Opportunity Zone. And what the areas that it highlights are specific to like North and Northeast Denver. There's parts of West Denver that are included in there. Sun Valley was one of them. We had Commerce City, even West Sun Valley even bordered up to like a little bit of Sloan's Lake area, right? And some of that Edgewater space.
Yep.
So
don't tell people our secrets. You can't tell them the good right. parts.
So it's bordering up to some decent spaces. And so again, like we go back to the like real example, right? I just sold a bunch of Bitcoin. Now I'm going to pass it through this opportunity fund and go buy, let's say some like warehouse space, right? And now I'm going to change that warehouse space into a business that I want to run in that opportunity zone. And now I can make a bunch of money that's going to be, as that business or asset appreciates over time, can be tax deferred or tax free, which is pretty cool. So definitely a way to save hundreds of thousands of dollars in taxes.
Yep. And I know some of the point of crypto is that it's like not traceable. I do know somebody who they sold a large stake in crypto. They got a letter from the IRS that said, hey, buddy, you got to pay some capital gains tax on that. So it's definitely something where, I think crypto is a great thing. If you're selling a company, just really any large asset and you want to not pay a bunch of taxes on it, this is a great thing to do. And you can do any type of business other than what they legally term as like sin businesses. So if you're thinking of opening up a casino, unfortunately, they're not going to let you do that. But pretty much every other business, anything that you're looking to invest in, you can even invest in a pre-existing business. There's just thresholds that you have to meet of growing that business after you purchase it. But I think a really great play here is like if you're getting residential real estate, you're going to make that money from rental income, hold on to it while it appreciates for 10 years. And then once you sell it, all that appreciation, all the original capital that you put into it, no taxes.
It's awesome.
Yeah.
So like Westwood is one of them, Sun Valley, Swansea, Globeville, parts of Five Points, near the National Western Complex, along I-70 and major rail transit corridors. There's a lot of these little pockets that you can look at on the map. And as long as you're inside those areas, then this applies. So
yeah. The West Pleasant View one has parts of Applewood in it that are really nice. Like there's a lot of these that if you know what you're looking at, there's portions of it that are still within those boundaries that I wouldn't expect to be there. So there's definitely, I would say, even bigger opportunities inside of the opportunity zones.
A lot of people think that like the way we're talking, it could sound like we're saying like these areas are bad areas or rundown areas, but what they're actually for is they're positioned for like growth and transformation. So you'll see a lot of these areas. There may have been opportunity zones, farther back that were qualified as it, but they're no longer because they have been developed and they have been transformed or gentrified or whatever you want to call it. And so these areas are kind of those areas pitted to be in that transformation spot, a little bit closer to downtown usually. But what types of investments like in those areas actually qualify?
Yeah. So
That's the big question.
that is the big question. So it's going to be like ground up developments where you're just buying the land and then developing the land. Major renovations. So it could go back to like taking a single family home and making it into a multifamily type deal if zoning allows, or adding an ADU, I think would probably qualify. Multifamily housing. So apartment buildings, commercial housing, stuff like that. Industrial space, flex or commercial space, commercial buildings, and then operating businesses located like if you buy a pre-existing, like you were saying, Jackson, one that's already going in an opportunity zone, that counts as well.
Now, is an opportunity zone, so when we're talking about like ground up development, for example, could that mean, so we see a bunch of these in Denver, I feel like, where they scrape what was there and then they build a brand new big old boxy place. Is that an opportunity zone? Would that be considered one of those as long as it's in that?
As long as it's in that area.
In that area, right?
I bet a lot of them are.
Yeah, they've got to be, because you'll be looking at all these brick homes, like, and then bam, just this almost out of place spot in the neighborhood.
It's crazy, like when politicians get like reviewed, right? As far as how much did you actually pay in taxes, right? And everyone makes a big deal out of that. Like a lot of these big time business big wigs are playing the tax loophole game, right?
Yep.
And this is one of those things that they're using. And whether it's conservation easements or whether it's opportunity zones, like they're taking advantage of some of these loopholes in the tax code that are out there for everybody. But obviously, you have to have funds, you have to have a lot of planning that goes into it, and so this is one of the ways that happens, I think. So.
Yeah, and one note is you do have to make 50% of your revenue in the opportunity zone. So it's like if you have an online business where you're generating your money from that and you're just saying, oh, hey, I'm going to open up shop in the zone, that won't qualify. But anything where you're making that money in the zone, which rental income, 100% of that would be in the zone, that qualifies you. So it's not super stringent on what you have to do. And right now, this is the first iteration, but in the second iteration, they're actually lowering that threshold of improvement. So instead of like 100% improvement, they're lowering it down to 50%. So that even opens it up to like, hey, we're just going to do some renovations on this home and we're going to update it, make it nice, and rent it out.
Yeah.
That's kind of nice, though. And it still puts your money in a good spot without having to spend a ton of it to renovate it. So
Definitely. And I think a lot of these builders, like infill project type builders, are looking for these, opportunities
100%.
in these opportunity zones, so they can do something like this. But,
So we did mention, though, did you mention quick flips, like minor cosmetic renovations, like stuff like that probably are not going to work for these,
yeah, got to be long term.
the land of
Yeah.
Oz?
So, you can defer up to a calendar year.
Right.
So if you were doing a quick fix and flip, it would just defer those taxes another year, which probably isn't going to help you a ton. You have to hold it for 10 years to really get the full benefit, and you can hold it all the way until 2046. So if you get a business, the business is growing, making a ton of money, you can hold on to it for 20 years, sell it right before that threshold, and you never pay taxes.
Yeah. Some pretty amazing gains. And so kind of some of the qualifications, right? It's a good fit for you if you have a large amount of capital gains that you need to figure out what to do with before you get taxed on it. And then number two, you definitely don't need the liquidity, so you can't have to cash out on it in the next 10 years. So you want to be able to at least hold it for 10. And then if you want tax efficient growth, this is for you. If you believe in Denver's long-term fundamentals, like as a city, that we're going to be, looking good over the next 10 plus years, then that's a good sign that you should do this. And then if you already, you're already investing at a higher level, and maybe at a higher tax bracket as well, like this is something that you should definitely look into. But if you don't like complexity, this may not be for you, right? If you just want to keep things simple, just keep buying rentals and you'll probably be okay if you're just, a little on the simpler side of investing. But this is something that people that are willing to let a CPA handle a lot of the complexity for you. You don't have to handle all of the complexity, right? But if you've got a great idea for a business and you think it could work in some of these areas, that's a great thing to be looking for.
Yeah. Yeah. Any sale of an asset. So it's like, that could be cryptocurrency, that could be selling your business, real estate, but it can also be stocks and bonds. So I know somebody personally who he got into a very big company now as a startup. He could sell some of his stock from that company, take that money and put it into an asset in one of these opportunity zones and never pay taxes on it. So he's eventually going to have to pay taxes whenever he sells those. Yeah. But doing something like this, you can, even just selling stock, not even selling your whole company, you're able to avoid that tax hit.
Yep, absolutely. Yeah, and again, don't take our word for it. Talk to the experts, the CPAs. They know this stuff inside and out. So if you need a good CPA, we have some referrals that we can give you as far as that goes. Some great ones. Nathan Moore, Ryan Wynn, some awesome guys that can help you with that. But if you're sitting on capital gains and you're wondering, if opportunities make sense for you, the first step isn't buying a property. It's building the right team around you. And it starts with a CPA as far as that goes, but then you may need some real estate help as well. And if that's the case, we're here to help. We can definitely show you properties within the opportunity zone and see if we can, create a really cool multifamily situation and brainstorm with you as to how that could work. And that's where our expertise falls. And so we appreciate you guys listening, and we'll catch you on the next episode.